So when you go out to lunch in Evans or Martinez or what have you, and you bump into someone, do they ever say to you, Mark, what's the market like? What do you think? Do you give them a little overview?
I'll do that. And as we've talked about in the past, everybody has an opinion on the markets.
Sure.
But what I will say high level is 2022 was difficult for investors to absorb, mainly in their 401k accounts, because that's where their investments generally are. However, from my perspective and being in the business since the late 90s, it was a healthy thing. The markets needed that transition to a more normal capital market scenario. And the reason why I say that is because after 08 and 09, when we had a very difficult time, interest rates remained very low for a very long time, and that completely changed how money was invested. So you fast forward to late 2021, start of 2022, stock valuations were very high. So last year, I wasn't surprised at all that we saw a correction in the markets. The real question is, are we going to see some more collateral damage as a result of that? There's a possibility that, however, it's been healthy, which is a good thing. And so I think it sets us in a position that once we get beyond this period of time, maybe late 2023, early 2024, we're in a much more manageable position to buy stocks, bonds, whatever the case might be.
Any crystal ball on the Feds and rates?
Right now, the expectation is there's going to be definitely 25 basis points. It's most likely going to be 50 basis points. The real question is it going to be once or twice? And I think hopefully one increase in the interest rate environment that's fine. However, we've sustained so much in a short period of time. I think we need to let some of it flow through to the markets. You know, I think we can do it a little bit too quickly, meaning the Fed. So hopefully that'll be the end of it, and then we'll see. Because actually what will happen is third, fourth quarter, earnings will come out. Expectations will be here, and earnings will either be there or not. And then that's what's going to drive where stocks go at that point. The expectation, many experts believe that we're going to have a soft landing. You know, we're not going to have a significant recession. However, there's always a caveat. If you increase the rates, you know, twice at 50 basis points, that's a full 100. You could be in a recession very quickly.